talk a bit more about this exclusive trillion-dollar club. And for that, we're joined by Anthony Chan. Anthony's a former chief economist at JPMorgan Chase. Anthony, always good to see you. This is an interesting topic, and a club that I'd like to be a member of, that's for sure. But first off, explain what it really means to be a member of the trillion-dollar club. Kind of put it in perspective.
Sean, what it means for most of those companies is that you have to have a company that's focused on innovation and on strong economic growth. Because remember that when you have strong economic growth, you have large multiples, so the price-earnings ratio, which helps the market capitalization grow even faster. That is exactly why it's a little bit strange, I would say, to see a company like Berkshire Hathaway join the club, because they're not a tech company. They're a conglomerate, and conglomerates are fine, but they're not the sort of company that grows very rapidly, and that's why it took so long to get there. But these technology companies, they foster economic growth, they're big employers, and often they sort of lead innovation in a given country. So in the US technology with artificial intelligence, many of these companies that belong to this club play a pivotal role in that trend.
Yeah, exactly. I mean, the companies we talked about, they are the heavyweights, and Nvidia, perhaps the most recent member of that club. And we talked about some of the pratfalls when you become a member of the trillion-dollar club, and that is more scrutiny. And Nvidia is undergoing that right now, and that certainly had an impact on the company today.
Absolutely, because when you're that big, you certainly have a much bigger footprint. Regulators are watching, and they're watching many of these companies that are on the list. And that means that the investors have to be aware, because if all of a sudden regulators really put their claws on these companies, what it will do is slow economic growth and therefore not be able to justify those high price earnings ratios that they have. So again, to be in this club, you have to be growing very fast, and you have to be almost free of regulators' reign to prevent you from continuing to grow, to remain in that club.
I want to get your take on perhaps the subtle differences or the huge differences between Apple, Microsoft, Alphabet, Amazon, and Meta. But I want to talk about Nvidia, because it is on the cutting edge of the biggest thing going on right now, and pretty much was so far ahead of any of its competitors that it's kind of the only game in town. But that's going to change. It has to change.
Well, Sean, you're right. You're absolutely spot on. It is going to change, because they cannot continue to grow revenues at 80 to 100% year over year indefinitely. And for the most part, some investors realize that, but others are thinking, let's continue to remain hopeful that this growth continues into the future. But we know that trees do not grow to the stars. And so that's one of the reasons why, when you look at an Nvidia, even though they beat earnings, they beat on revenues, their guidance was respectable, but at the same time, it gave some indication that maybe growth is not unlimited, and that caused some of the slowdown or some of the negative headwinds in the price of the stock Nvidia. But right now, you're absolutely right. Nvidia, right before reported earnings, many investors were saying it's probably the most important company in the world, because it's right at the forefront of artificial intelligence. That Blackwell chip, everybody was paying close attention to it, and the fact that it was delayed got some people nervous.
Okay, let's talk about Berkshire Hathaway, because Warren Buffett, the Oracle of Omaha, he's always been just a genius at what he does, and just revered by so many. How did that company just continue to climb over that 44-year period to reach this $1 trillion mark? And one would think that its foundation is rock solid.
Absolutely, and that's why it's such a big success story, because you very rarely see a conglomerate, non-technology focused company really growing this rapidly to reach that $1 trillion club. So it is quite significant, and you look at other non-tech companies, they've not achieved that. Remember that a company like Berkshire Hathaway doesn't get that price earnings multiple expansion that some company like Nvidia or Alphabet or Apple would get, because again, you don't expect that kind of growth. So that's why reaching that milestone is so super impressive.
Okay, Anthony, we got about a minute left. I want to talk about Saudi Aramco, because it's been out there for a long time as well, and clearly fossil fuels, oil, has been so beneficial to Saudi Arabia. Kind of describe why that company is really so much different than the other ones we're talking about.
It really is different because, to some extent, the government has some control, and the logic is that somehow, if the government has control, or at least the goals of the company are aligned more closely with the government, the implication is that maybe it's not going to grow as fast. But again, energy is such an important commodity, is sold all over the world, and the government has supported it so much that it actually has done quite well. But at the same time, if you're looking at a company like Saudi Aramco, it's great, but you ask yourself, does that have the same kind of growth potential as a company like Nvidia? Probably not. But the fact that it has such a large footprint is giving it that huge market capitalization, and it's still a very impressive story.